Hello students, welcome back to GK's education. So, how are you going? How is your study now? We have almost completed the very important and tough part of our syllabus, that is partnership accounts. So, we are going through the last part of this, the dissolution of a partnership firm. I hope you are getting everything very much clear. So if you are getting your point, you can say your doubts clear, please do not forget to like and subscribe my channel, GK's education. So let us come to the point. Let us come to today's lecture. It is today we are going to do the basic journal entries on dissolution of firm, as we have already done the performa of realization account in the previous lecture. But even then we have to do the journal entries, as while doing the practical questions there are some conditions, there are some situations where we have to pass the journal entry, and accordingly we have to adjust it in the accounts. So let us check out all the entries and compare them to the perform of the realization account which we did in the previous video. So let us come let us come to the journal entries. The first entry is for the transfer of assets. For the transfer of assets, there is an entry when we close all the assets account. The entry is realization account debit to all assets. Individually, every asset is credited, as the account of asset is always debit. So here we credited to close the account, and we did this entry in realization account on the debit side. All the assets individually, realization account debit to all the assets individually except cash and bank. Here the entry of cash and bank balance is not transferred. So the number 2 entry is for the transfer of liabilities account debit to realization. As all the liabilities are always credit, so we will debit the liabilities account individually and to realization account and credit the realization account. So this entry will pass here, as the liabilities will be in the credit side. Sundry creditors, bills payable, overdraft, outstanding expenses. Now point to be noted is debit cash or bank balance is not transferred, but the bank overdraft has to be transferred always. So it is kept in mind, the treatment of bank overdraft. And outstanding expenses and provision for doubtful debts. Here always the debtors at the full value are transferred to the debit side, and their provision is transferred to the credit side. Now after that, for sale of asset, the third entry is for the sale of asset. So the third entry will be the when this assets will be sold, cash will come in. So bank account debit to realization account. So for the sale of asset, we did it on the credit side, bank account debit to realization account, and in realization account by bank this sale of asset amount. And then the 4 entry for an asset taken over by a partner. If a partner takes off an asset, then partner's capital account debit to realization account. Here in realization account by partner's capital account if for the assets taken by the partner. And then we have the entry for the payment of liabilities, realization account debit to bank when the cash goes out. So in realization account it is to bank for payment of liabilities, which we did. And then some difficult things for the liability which a partner takes responsibility to discharge, then realization account debit to partners capital account. So here realization account debit to partners capital account for the liability assumed or taken over by a partner. So entry is entered on the debit side. And now few basic adjustments for the settlement with the creditor through the transfer of assets. When a creditor accepts an asset in full and final settlement of his account, the journal entry needs to be recorded. But if the creditor accepts an asset only as a part of the payment of his due, the entry will be made for cash payment only. Yes, the point is, if the creditor, the person to whom we have to pay the money, he accepts any asset for that credit given to us, in that case, for the full and final statement of his account, so no journal entry in that case, no entry is required to be noted. But when the creditor accepts the asset only as a part payment of his due, the entry will be made for the cash payment only. So only the cash will be there. Till only the cash part will be there. Let us take an example. A creditor to whom rupees 10,000 was due accepts the office equipment worth 8,000 and is paid 2,000 in cash. That means for 10,000 he accepts the equipment worth 8,000 and 2,000 in cash. Now the entry for 8,000 will not be made at all. Only the entry will be made for 2,000. So the entry will be realization account debit to bank account. So this will be the entry. Now come up to the next entry. Yes, but in the case the creditor accepts an asset whose value is more than the amount due to the creditor, he will pay cash to the firm for the difference. So if the creditor accepts the, you can say he likes the asset which has more value than the amount due to him, in that case the difference will be paid by him to the firm. Only the entry of difference will be there, and that will be bank account debit to realization account. So it is kept in mind, bank account debit and realization account will be credited. So entry will be go through realization account. Number 8, for the payment of realization expenses. Now again there are few conditions for realization expenses. What they are? When some expenses are incurred and paid by the firm in the process of realization of assets and payment of liabilities. If the expenses are paid by the firm, then simply realization account debit to bank on the debit side of the bank for the expenses. And then when the realization expenses are paid by the partner on the behalf of the firm, if any partner pays on the behalf of the firm, in that case realization account debit to partner's capital account. This is for the paid by the partner. And then C, when the partner has agreed to undertake the dissolution work or for an agreed remuneration to bear the realization expenses. That means if a partner has undertaken to work for the dissolution process, so he will get the agreed remuneration. So in that case, if the payment of realization expenses is made by the firm, if the payment is made by the firm, then partner's capital account debit to bank. If the partner himself pays the realization expenses, then no entry is required. So it has to be kept in mind, if the partner himself pays, no entry is required. If the firm pays, then partner's capital account will be debited to bank, because partner is undertaking the work. And then third condition, for the agreed remuneration to such partner, if we pay remuneration, when we will pay the remuneration to partner who is working for the dissolution process, then realization account debit to partner's capital account, as they will be considered as partner's expenses, as firm's expenses. So realization account is debited here. So this is the entry. Keep in mind all these conditions very carefully. And then for realization of any unrecorded asset included goodwill, if any, if for any unrecorded asset, if entry is there, then bank account debit to realization. For the realization, when it is sold out, then realization account is credited. And then for the settlement of any unrecorded liability, if any unrecorded liability was there and is paid out, then realization account debit to bank. The entry will be on the debit side of the bank. Next is for the transfer of profit and loss on realization. If there is a profit, then realization account debit to partners capital account individually in their old profit sharing ratio. And in the case of loss, partner's capital account debit in old profit sharing ratio to realization account. Next, for the transfer of accumulated profits in the firm in the form of reserve fund or general reserve. So for the reserves, the entry will be general or reserve fund account debit to partners capital account in the old profit sharing ratio. Then, for the transfer of fictitious assets, if any, to the partners' capital accounts in their profit sharing ratio. So, partners' capital accounts individually to that fictitious asset. As asset is always debit, so now it will credit and partners' capital account will be debited. Now, for the payment of loans due to the partner, if any payment is due to partner for his loan, then partner's loan account debit to bank. Now, for settlement of partner's account, if the partner's capital account shows a debit balance, then he brings a necessary cash for which the entry will be bank account debit to partner's capital account. And if the balance is paid to the partner whose capital account shows a credit balance, then entry is partner's capital account debit to bank. So this is a final entry which will tell you the bank account, and the question is solved. Now let us do one example to make our entries more clear. Here B and Y are equal partners in the firm. They decide to dissolve the partnership on 31st March when the balance sheet is as building, machinery, furniture, debtors, stock, bank and capitals, general reserve, B's loan and creditors account. Now the entry is the asset realized, stock, debtors and machinery this much amount. Y took over the furniture at 9,000 and B agreed to accept 2,500 in full settlement of his loan account, and then dissolution expenses were 2,500. Now prepare the realization account, B's loan account, capital accounts of partners and bank account. Now let us first come to the realization account. The first thing is we will transfer the assets, building, machinery, furniture, debtors and stock. Now they will be transferred here at the same value. Building, machinery, furniture, debtors, stock, all these are transferred. And then liabilities, from liability side only creditors account will be transferred, so it is here creditors account. And now by bank, then creditors account, and then yes, by bank the realized amounts will be entered. Stock 22, debtor 75, machinery 16 and building 35,000. So all these are entered here, and the credit side total comes out to be 80,500. And then Y took over the furniture at 9,000. So this is the entry. Y took over the furniture by Y's capital for furniture 9,000 is entered. And then uh, B agreed to accept 2,500 in full settlement of his loan account. So 2,500 B is accepting. Here only the loss is here only the difference part. By B's loan 500 is transferred. Now how it is done, we will I'm going to show you the loan account. Dissolution expenses 2,500. So here dissolution expenses 2,500 and creditors nothing is yes, nothing is given for creditors. So we assume that creditors 14,000 are paid in full, 14,400. Yes, 14,400. The creditors are paid in full, we assume, and then expenses are shown. And now let us check this B's loan account, how it happened. It is here. Loan account balance was 3,000. B's loan, the balance was 3,000. So we transferred it here, balance, and then he accept 2,500 in full settlement of his loan. So 2,500 to bank as he received 2,500. Then the difference of that, that means the loss, is transferred to realization account. So here realization account enters as 500 only. Now we will balance this account and the loss comes out to be 16,500, and this loss will be transferred equally to partners capital accounts. Now let us check the partners capital accounts, how they will do. The opening balances are 50,000 and 40,000. So these are the opening balances. Then general reserve is there 8,000, which we will transfer half and half as they were sharing profits equally. Then to realization account, their loss, it this amount of loss is transferring here. And then we entered B's cap, we made an entry for the capital, for the furniture wise capital account to realization 9,000 for the furniture taken over. So here partners wise capital account to realization 9,000 will be entered here in his account. And then we will balance the capital accounts and make the entry to bank. Now at the bank account, the opening balance of bank was the opening balance of bank was 11,000, so it is here 11,000. By realization from the assets we got 80,500, it is here 80,500. We made payment to B's loan 2,500 by B's loan. Then we make payment to liabilities 16,500, it is entered here. And then the total of these two capital accounts is entered. If both the sides come equal, then our question is clear. So this is how we do a basic, we can say, dissolution of firms question. So in the coming video I'll be doing more practical questions to make you the concept of dissolution in practical form very much clear. I hope you got the entries. We have to do the entries as they are very important as per the practical situations given in the question. So do them very carefully and revise them. All the best. Thank you.